What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 9th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend a time to talk about a few key things. Bitcoin's drop down below $18,000, trending in the mid $17,000 range last night. I'm going to be talking about what I think is going to be happening over the next few days and weeks. And outside of that as well, taking a look at altcoins and taking a look at the big picture. Ray Dalio coming out not only in the sense of stating that he believes there's going to be a flood of new money and cash as assets balloon to record high valuations, but along with that as well, how Bitcoin and other alternative assets could possibly win out. So let's go ahead and dive straight into it, guys. First off, taking a look here at the last 24 hours, we can see that the vast majority of cryptocurrencies are in red territory. This is following an overnight sell-off in Bitcoin as we started to charter down below $18,000 in price. Now, I want to go ahead and just take a step back here, look at the daily chart. First off, above all, guys, we have to think, are we getting emotional about things? That's the key thing you always have to worry about as a trader. I see it here on the channel, guys. I'm not going to be, lying to you in any regard. We tend to get a lot more views and stuff when there's fear in the market, when there's a lot of scare. But I got to tell you guys this, as much as I want you to join me in on the videos, whether good or bad markets, I'm going to show you the real picture here. Just take a step back a little bit. We're doing perfectly fine. In fact, what's really nice about this is that, as we've kind of talked about on the channel, that we were probably expecting it would be on maybe one of these longer term lines, like on this red line here. We've actually been able to hold higher lows. And in fact, if we continue this trend here, we would be setting ourselves to pop up above 20K, so long as we hold the line, all the way going into here towards the end of the year, which really isn't that bad. It's just a couple weeks away. So it's really not that bad. Now, that's the optimistic scenario here, right? We don't even have to look at the hourly or the 5-minute chart to really get this perspective. If we break this line somehow, maybe we build up into December, or we break it tomorrow or in the next couple of days, then in this case, we would be looking at this red line of support here that's been building back from these two support levels back in October. That would be the next reasonable range here. And again, if you guys want some kind of perspective on, just my general thesis about how I think Bitcoin's going to play out, I talked about it in yesterday's video. The major goal here is that we're going to probably see sideways consolidation. And I don't think we're going to see some massive sell-off here because buyers are coming in each and every time. Notice on the bottom of these dips, there aren't any, for example, solid closes on the daily here. In fact, we get a lot of steady rebounds in price. In fact, always in this case, retesting towards relative new highs after these kind of corrections, getting back up towards this near $20,000 level. I can't tell you guys of many markets when you're testing back to the all-time highs, you have a sell-off like this, and then buyers come back in to meet against all that sell-side pressure. I mean, again, this is something that is really unprecedented, guys, and it's why Bitcoin is really exciting right now. That's why I'm not bearish on it. I think in this case, it'll push sideways. Eventually, we'll get that kind of catalyst moment where we've heard MicroStrategy and a lot of other companies are still building up Bitcoin positions. So in this case, whatever that story is, I would assume it's something that's going to cause like $1 billion of side pressure. We're going to get an April 2019 pop, right? Something like this where the chart itself is kind of consolidating and then pop. Huge volume, some big headline story, maybe multiple coming out that's going to serve as a catalyst mode to break above this level. And then we're going to have to make 20K support. That's going to be a key thing to do after that because it's going to be a very big level. Now, second off here, I wanted to take a look at altcoin dominance because I know everyone was panicking about altcoins. But if you take a look at the 8-hour chart here, you can see that we actually recouped pretty much most of the losses and are trending back where we've been over the last couple of days in early December. And in fact, as we build up to this technical pattern here, it's looking like we might finally break out. I'm going to get really, really confident on altcoins if we get above this yellow line here, because this was the most critical point of support and resistance here in the past couple of weeks in regards to this price range, going back here to late October. So again, it's going to be really critical to get up here, break above this line of resistance, and start charting higher. I think we've got a serious opportunity to do so, guys. We haven't seen this kind of rebound in crypto in the sense of altcoins in a long period of time, and in fact, holding this as well. That's why I'm not fudding in this market, guys. I think if you take a look at most of the major altcoins that are doing great things in this space or have the excitement and momentum of traders, then in this case, you're going to see that they're holding up quite nicely even after the sell-off. Now, next up, I wanted to talk about some key news here. Playing into the discussion of growing institutional interest, we not only have crypto funds seeing record investment inflows over the last week, we've seen this from a lot of major companies here. The biggest one is this dichotomy here where we're seeing between gold funds getting some of their worst outflows. So they're basically getting a ton of money outflowing of these funds. And along with that, crypto funds getting a massive surge. Last week, as Bitcoin broke to its all-time high price, institutional investors poured the second highest amount on record into cryptocurrency funds. Now, this is coming through a lot of different ways. Funds can kind of vary. You also have exchange-traded notes, such as Grayscale, and you have GBTC, and you also have the Ethereum ETN that they own. But along with this as well, the total amount here, broadly speaking, has gone to 15 billion assets under management, most of that being owned by Grayscale. And it's really, really exciting to see. Again, this is coming again following all the news and developments in the space. And I think this is a very expected trend as we get back up to those all-time highs. Unfortunately, people don't want to buy the dip. But actually, I would say it's pretty fortunate for those of you who I know at my channel had bought back at $3,000 during the panic sell-off in March. There's a ton of people, a lot of retail traders, everyday people who are winning out on that trade. So good on you if you were one of those people who did that. Congratulations. But let's go ahead and just talk here about the critical point here that I want to hit on, guys. I hate to be someone to stretch things. You guys know I'm pretty moderate. I kind of wait for, I try to view things in a very like non-biased way. I don't try to sell you guys on, oh, someone said this, or oh, so-and-so is making this investment. But I will say this is actually, I think, a like... I don't know what would be the saying for it. You guys know I'm not good at it. Basically, this is a key warning sign that I think we're going to see Ray Dalio in the next coming weeks, next coming months, going into the new year, come out and state that he's built a position in Bitcoin or is considering building it. In most cases, it's going to be the first of those two. He's going to just come right out and say, we've built a position in Bitcoin. Usually investors of that size aren't going to tell you, oh, I'm considering it, and then the price goes up 20% and everyone's FOMOing in, and you pay a premium. So Ray Dalio has already said in this case, this is from you're going to see both of these headlines are coming from a Reddit AMA. Now, he did do this. You can check his Twitter page and stuff, but a Ask Me Anything. And not only did Bloomberg quote a very important part, which is that Ray Dalio sees a flood of money with soaring asset prices. So he's seeing a flood of new supposed wealth creation or basically cash flowing through the system as people are able to take record profits on equity positions. And that is relatively true, not only in the fact because of central bank monetary policy, but because we've had a new wave of retail traders. We're in our second dot-com bubble. And we're just really at the beginning stages of this, if this is really going to get as crazy as it was back in 2000. Now with all the cash and excitement around the tech sector, and Tesla at $600 billion, PayPal tripling its valuation over the last couple of months through 2020. All these big major moves that are going on in equity markets, some of which are just way overhyped and way overexcited. But markets can remain irrational for a long time. And this is where I really want to focus in on. As we see equities going towards all-time highs, there's very few markets in this case who are trending at fair levels, whether it be at their all-time highs or, for example, they're just not at the same multiples that equities have done in the sense of their market size. I want to talk about this. In that same AMA, Ray Dalio, in this case, not only echoed his point of flood of money and credit, but actually echoes some pretty good praise for Bitcoin here. Let's go ahead and just dive straight into the quote here. So this is the major point that he put in his Ask Me Anything. You guys can go ahead and check it out there. He said, I think that Bitcoin and some other digital currencies have over the last 10 years established themselves as interesting gold-like asset alternatives with similarities and differences to gold and other limited supply mobile on like real estate storeholds of wealth. So it could serve as a diversifier to gold and other such storeholds of wealth assets. That sounds like someone who originally thought Bitcoin was going to get banned by the government, that Bitcoin, not per se was a scam, but just was a completely speculative asset that with no value whatsoever. That seems like a big shift. And I want to praise Ray Dalio for that because I've been following Ray for a long time. This has been one of the positions I've really wanted to see him take on because I think it's right down his alley from his perspective of being a macro investor. And I think Ray gets the big picture. He's starting to see it now that, look, this has been around. The markets for these cryptos have been established for 10 years. If there was just some exit or if governments were going to ban it, all these fears that people generally have about crypto, it would have probably happened by now. It's not to say that it can't, but it's very unlikely at this point. The more and more this asset develops, in this case, the more it starts to establish itself, get institutional investors on board, getting more retail participation and adoption of the core networks, the better it's going to survive with its finite supply in a market where central banks know no limits when it comes to printing money, know no limits when it comes to experimenting with negative interest rates, and know no limits to pushing us towards an inevitable boundary when savings accounts are going to be at 0% interest, if not negative. People's bonds, trillions of dollars, tens if not hundreds of bonds, are going to be negative yielding. Almost $100 billion in bonds across the globe, whether it be U.S. Treasuries, German bonds, whatever type of bonds you're talking about, they're going to be reaching towards a total valuation of $100 trillion in real negative yielding debt, which will be a historic high that we've never seen without human history, or within human history. It's the morning. I'm a bit dramatic, a little melodramatic, but I'm, as always, getting a few terms here and there wrong. Above all, guys, you get the picture. This is massive. And, as we're talking about it here, again, just keeping perspective, I know a lot of people get worried, am I buying Bitcoin too high? We're at a $339 billion market cap, guys. These are dips that institutions and other players in the market are buying. And in some cases, they're buying spot market. It's not always available to get these OTC trades anymore because there's a ton of people who are at the dinner table asking for a plate. They're looking to get a piece of the pie in that case. Anyways, guys, that's it for today's video. I hope you like this video. If you do, please consider dropping a like. It really helps out the channel. Consider subscribing and hitting the bell icon if you haven't already. Leave a comment on what you think down below. And if you're looking to get started in crypto, you can not only check out digifox.finance, where you can get started on buying crypto and earning interest at the same time, much better than going to a traditional exchange platform. The link's down below in the description. And along with that as well, if you're interested in getting a deeper dive into the macroeconomics of things, what's going on in crypto, equities, forex, and commodities, you can definitely check out the Dash report down below in the description. A great way to get some information as to what I'm watching in the market and what trends are making up the world stage of the economy. All right. Anyways, everyone, that's it for today's video. Thank you all so much for watching. I hope you're having a fantastic one wherever you are, and I'll see you all in the next video. Take care, everyone.